Hey everybody, this is part 2 of why we lose money in the markets. The reality is that the markets have been around forever and we just got started, right? So this is almost like having to play your favorite sport against the athlete that's been playing for almost 15 to 20 years and expecting to come out on top. They have been playing that sport for their whole lives, ever since they were 5, 6, or 7 years old, and we haven't been. And for us to have to go up and perform at their level is not easy. So what we need to do is we need to figure out how they think so we can get ahead of them. A few ways that you can think and get ahead of them is either you put in whatever number of hours they have put in over that span of time in a smaller period of time to figure out what's happening, or we find somebody that has that experience, that's honest, that can give you that advice and that can teach you that experience, or we can read books, we can watch videos, and whatever else there is to gain that experience. Now the problem is that there is so much to learn in such a small period of time that is not easy to get out and to be on top. It just takes a long time. And to be at that level, it takes time, and and it takes a lot of persistence, because you'll not come out on top every single time that you are coming across this situation. And we have to understand how they think, and we're going to go over that a little bit here just to clarify a few things. So again, this was my chart that I opened up last time to give you a bit of an understanding as to how I see things and how I look at things. This is obviously a portion of it, because nothing can be done over a small period of time, such a small period of time. So this was the biggest mover today, INPX, and it was a really messy chart to begin with. It was really messy. I mean, you probably got kicked out 3 or 4 times if you were in this stock. We'll start off with the 1 minute chart here. Again, the 1 minute chart for some stocks can be too fast, and I believe for this one it was a bit too fast. And let's go over what really happened. So the stock had news in the morning today, right? Gapped up a little bit, coming out of oversold levels. Pre-market it was up a tiny bit. So we started the day off right here, and really there's no indication that the stock is going to move until about maybe right here around 11 o'clock. By the time everybody thinks that it's going to be a dead day and they have moved on and they're doing their own thing now, the stock wants to start moving. Luckily for us, we trade past 11 o'clock, and we were well aware of what was happening. This stock, if you got in, let's just say for the new high of the day around 209, you had an opportunity to sell for a profit around 240. If you didn't sell for a profit, you were probably freaking out when it came down, and you probably sold, and you were probably angry, frustrated, because you lost profit on the way up. So let's just say you lost $250 on the way up. You lost that $250, and then you lost whatever you lost when it came and hit your stop, or if you sold. As if you sold. Most of us don't have the habit of selling when we're down. We think the stock will recover. Luckily for us, the stock did recover, and it recovered big time. So the stock starts to move up, and it goes up a little bit higher, right? It goes from a low of 193 to a high of roughly 301-ish around 11:13. and then it comes right back down to scare you and kick you away. Now, how you deal with this is very, very important. The reality is, if you are day trading, you should take a profit every single time that the stock moves up and you are reaching a certain goal that you were expecting with this stock. Remember, these guys, they've been doing it for years and years, and this is their way of making sure that you're not a part of the fun. And they need somebody to sell to. And if you put yourself in a position where you become vulnerable and they take advantage of you, you can't really say much because this is really the only way to trade this with a profit, right? So you went up there, you should have sold. It comes down, you're like, oh, thank God I sold. You've built confidence in this level. This is how they're thinking, right? You've built confidence in this level. You're like, you know what? Maybe I got this. Maybe this is the way to do this. So you know what happens? The stock starts to move up and it makes a new high of day around 250. You get in around 250, the stock jumps up to $3. You get one opportunity, you missed it, no problem. It goes to a high of 287 again, you missed it, no problem. This is a rare situation. It doesn't always give you 2 to 3 opportunities. Normally it gives you just 2 and sometimes just even 1. But let's just say you bought it at 250 and you sold at like 280. And you're like, oh man, this thing is going up. Now your confidence is moving down because you're like, man, I missed almost 20 cents in profit. No problem. Look what happens. It comes right back down, and what it does here is kicks people out. It kicks out stop losses, and at the same time, they do give themselves confirmation that, yeah, we are moving higher. Because the reality is they are the ones that are putting in, millions of dollars, tens of millions, in some cases hundreds of millions. So for them, it was like, yeah, you know what? We got the confirmation and we are going to move higher. The stock goes sideways here to give you an indication that, yes, we have some sort of support. And this support, if you look to your left, you'll see that the support was at the previous high of day. So these things you're not gonna, if you're just starting out right now, you're not gonna learn it right now. It's gonna take you some time. But the least you can do is when you're up, a certain amount of money that you want, you get out, you run, you take your profits. The next time, what happens here? 301, we have a new high of day breakout. The stock moves up to 338. You make a decent profit there, right? What do we have here? We go from here to this high right over here. That is 11%. Let's just say your target every time is 4 to 5%. My target is 4%, and then I hold the last little bit that I have to see how high it can go and make a really good profit. I held 500 shares up to $3.99 because I thought the psychological resistance would be $4, and I was just like, this thing cannot run forever. I sold my last 500 shares at $3.99. I tried to sell it into this pump here. I couldn't. I had to hold it, go through this line that I drew here, and finally got back up to $3.99, and I was able to sell it here. The stock does come back down and it does move higher, and as you can see, it went pretty crazy. When you're trading this stuff, like in the previous video that we had, we said, let's look at the moving averages and let's see which moving average is the strong one, where the support it really lies. So the 20 and the 13 didn't make any difference here at all. No difference at all. The 50, the blue line, it gave you some support pretty much all the way through. This was the first time we crossed below the 50. If you wanted, you could have gotten in again above the 50 with your stop loss maybe 3 to 5% below the 50. You're giving yourself an opportunity to make another profit. Right? So what did we have here? So we found some support again. Support means the stock touches that level 2 to 3 times minimum. 2 to 3 times. Not just one bounce and it takes off. That's not real support. You want some solid support. So we kind of had a double bottom down here. I'm sure you've heard of these terms already, but my goal is to put all of this together in one video. So it's not like you have to jump from this one to that one and you go back and forth. So again, we had the same thing here. Over here, we had the same thing. We had one stop here, and it moved up higher. Over here, we had 1, 2, 3, 4, 5, 6, almost 6 times we were just at that level, staying strong. We move up higher. It makes a new high of day at 410, and you're like, you know what? I'm gonna see if I can do this again. You know what? This time it doesn't work. There are reasons why it doesn't work. We'll go over those in a different video at some other time. But it doesn't work for you because no way you're gonna sell it. You're gonna be able to sell it at 430. If you're a really quick trader, good for you. You made a profit, nice move, good job. Most likely, we're not selling it. I'm not able to sell it in this level unless I have a sell target, because my real concern here is that from here to there, the profit is about 5.5%, and the reality is, the only way I would be able to sell it is if I have a sell stop order. So I would have to say, you know what, I want to sell it at that target, which is normally 4%. So I could have technically traded that and made money there, but there's a small chance that I get in exactly at what is this, 410 or 411. It's hard for me to get in exactly at that level, but whatever happens, no problem. So we get above the 50 again. We have our stop loss below. So there were two possible entries for you at this level. You're getting in above the moving average that was previously support. So if it was previously support, now that moving average becomes resistance, and you moved above that resistance and you got a confirmation. You could have technically gotten in here, but we're not at that level yet where we're so professional that we're gonna actually be this disciplined to make this happen. It's gonna take us some time. Again, this video is not for people that have been trading for 10, 15, 20 years. This is for somebody that's been trading for about a year and a half to 3 or 4 years, but has been struggling. So if you're watching this is probably boring to you, and I apologize. So again, we get above the 50. Our stop loss is below the 50 if we got in here. If we got in here, we probably don't make a profit unless we're very happy with a 2 to 3% profit. We move up again and is riding along the 50 again. It scares people out, and people get a lot of stops get kicked in. Again, another time, 1 and then 2. So we found support again, right? So we found support again and we move higher. So if you got into this level and you said, I'm going to hold below this line, or I'm going to hold below the stop that I had down here, or I'm going to hold because there is going to be, this was the previous time that it stopped or it bottomed out, then you're actually going to make some sort of a profit here, which is good, which is amazing. And then we keep on moving. And again, if you wanted your entry, another entry could have been 434 and up to 465. Even selling at 450 from 434, I'd be content with that. But would you be content with that is the main question, right? And that's the level that you have to get to. Look at how many opportunities you had to profit from this stock if you had just known how to trade with discipline, and when it doesn't work, you run, right? Let's take this one for example. 461 up to 475. This is a gain of about 2.53%, and this wouldn't be enough for me. So now I have to say, okay, the 50 moving average was the support, because we saw that it was support here, it was support here. We broke down below it for a few seconds, not a problem. There's a way to deal with this. We'll go over that as well, but we basically keep moving higher, and then we see that it's support again. But if we break below that support, then what are we thinking? Why are we holding below that support? Support is basically the same as trust. The same way you trust your friend, your family members, your spouse, the same way you trust yourself, it's the same. You have to think the same way. There's trust between you and the 50 moving average. If the stock breaks below the 50 moving average, there's a breach of trust. Therefore, you do not trust the stock anymore. This stock was your friend. This stock was your friend. Picture your very best friend that you have. Your best friend, the person you would do anything for. It could be your pet. Who knows? It could be a family member. It could be an actual friend, somebody that you've known since grade one. Who knows? That is this friend right here. You guys had a hiccup here, no problem. He said sorry. You said sorry. You guys moved on. Everything was fine. This is him saying sorry. This is you saying sorry, and you guys move on. Everything's good. Over here, things are a bit shaky still, because over here everything was fantastic. But now things are a bit shaky, and over here something happened, but he quickly cleared it up. Everything is perfectly fine. No problem. So you guys keep on moving up. Over here, basically within 3 candlesticks, we were back above the 50, right? So we crossed below. This was 1, this was 2. Within 3 candlesticks, we were back above 50. That is a bit too much. For me, my comfort level is 2 candlesticks. So this one and this one, we're back above 50. So I have that much trust. But 3 candlesticks is a bit pushing it. But I mean, I normally don't trade in these areas. I don't even trade in this area. I don't trade between 12 and 2 o'clock, because the way the stock market works is they want you to make money between 9:30 and 11 o'clock, and they want to take that money away between 12 and 2:30 or 3 o'clock, and after 3 o'clock they want to take away some more. That's their goal. That's how they've been running this market for the longest time. Start thinking like them, become them, and get ahead of them. And this is the way to do it. Think ahead of them. And there are other things we'll go over in the in part 3 and 4, but for now this is what we need to look at, and this is basically it. Now, I know it's not that easy to understand what's really going on at these levels. What you need to realize is when a stock is moving up, this is called the MACD, the Moving Average Convergence Divergence Indicator. This is one of the 2 main indicators that I use besides the moving averages. When you're trading a stock and you see this thing curling down right about there, you're asking for this to come back down and curl back up. You're asking for way too much. You're asking for a train that's headed in the opposite direction to stop right away and start turning back around the other way. The same way it was heading downwards and it started to curl up here, the shorts were asking for too much, because it was already going down and it stopped and it started to turn around already. This is a ship. You have to imagine this stock as a ship. Now, a lot of professional traders will watch this and be like, haha, look at this guy, he uses the MACD. How can he be a professional trader? I'm not a professional trader. I'm just a regular trader. I'm just like everybody else. Nothing special about me. This is what I use as a part of my indication if I should get out of the stock or not, along with a few other indications that I use. Right? When you see this happening, you don't say the stock is going to continue higher. As you can see here, we started to curl down. We wasted a lot of time. What is this here? About 35 minutes. We could have been in a different trade at this time, although there weren't many. So let's look at it every time. We started to curl down here. And what did we really get after that move? We got this little bump here. Having to hold the stock through this period, all it takes is one quick drop for you to be down about 5 to 10% right here, because this is how it starts. This is how stocks start dropping. Like right here, perfect example. The stock dropped from here all the way down. That is 20%. It fell. Right? This stock might never have ran for the rest of the day again. So let's just say you're down about 20% within 1 minute, and you had let's just say $10,000 in this stock. and you're down 20%. Think about that. You're down $2,000 within a minute. Let's get ahead of the market. Let's be smarter than they are. The stock does end up moving higher, but there's no way we're selling up here. I mean, we might freak out, panic, and then sell over there, but the stock comes down and it starts moving higher, we're going to get in again. If you're getting in at the wrong times, and you're getting in at the wrong times, getting out at the wrong times, you are not thinking at their level. You're thinking either one step behind or two steps behind. And as long as you're behind, you're always going to be trying to catch up. You're always going to try to catch up. And that is not easy. That's the hard part. Trying to catch up, you're always behind. It just doesn't work. That's where you are right now. And that's where I am sometimes. When I'm not performing well, when I'm not trading well, that's my problem. I'm usually a step behind or two steps behind. And I'm getting in late and I'm getting out late. Well, I'm not getting out late because every order I place as a day trader, well, even as a swing trader, every order I place, I use a stop loss. I do not care about anything. I don't care the stock can go up $1,000, from $1 to $1,000. I will not break my rules. I will not do that because it just does not make any sense. Based on my experience, it doesn't make any sense. Like a doctor telling you, based on my experience, taking Advil to cure cancer is not going to work. I mean, I would take his advice for it because Advil has never said, the makers of Advil have never said this can cure cancer. Where am I getting this, this knowledge? Where am I figuring this out from? So these are the things. Like another example here, starts to curl down. Look at the messy area that you're in when it starts to curl down. Look at what happens. You really don't make much of a profit. Let's just say, yeah, either you're really quick, and again, if you're just a beginner, you're not very quick. If you're just starting out, and if you are struggling, you're definitely not quick. So that's the situation that we're in. So the same thing. So it does go up about 10%, but for us to sell in this spike, we're not at that level yet. Let's not think that far. Let's take this seriously. Let's practice it. Give me results. Give me your results on what you see over the next, even 24 hours, even over the next one day. Tell me what you see and how it works. All right, and you'll see the difference. Again, starting to curl down in the messy area. Starting to curl down in the messy area. Starting to curl down in the messy area. Maybe they use this, maybe they don't. But I use it and it works for me. I don't always use it because sometimes the market is really fast. Let's just say 9:30, as soon as the market opens, this thing is fluctuating up and down so quick. I don't get a chance to figure out what's really going on. But I know one thing's for sure. I'm not getting in while this thing is curling down. Please, for the love of God, do not get into a stock while this thing starts to curl down. This is the very basics of trading. Very basics. You are basically putting and together. So A and D, you're putting together. You're putting together a 3-letter word by figuring out that you should not be getting in when this thing is curling down. There's a chance the stock will move higher, but remember, this is a train, this is a ship that is headed in the opposite direction. Do not mess with it. There are times where you will see this curl back up. Is very rare, but even when it does, you don't make a lot of money. Let's just say you got in right here while it was curling down, right over here, right? 331. It goes to a high of 20. It goes up 22%. Are you gonna sell at this level if you're the type of person that's willing to buy while this thing is curling down? Look at how many times it actually happens. It just happens once the whole day. In one small area, it only happens once. It does turn around here and over here, but look at when it happens. It's a pretty big time frame between here and there. So let's just say you bought in here. A lot of times you will not actually see this thing go back up. Let's take a look at one more. I haven't looked at these charts yet. I'm going through it with you so you realize that you're not alone, and we're together. right? So let's take a look at this one. This thing starts to curl down, and let's just say you got in right here when it was starting to curl down. Up to the bottom is 6.3%. Now your stop loss should not be greater than 4 to 5% from what I understand, because there's a high chance. Remember, I'm only looking at the stocks that moved up. If I start looking at the stocks that didn't do well, you will really understand what's going on, and I will go over a couple of them. This is the best case scenario. This is all you're going to get. You've missed the real big move. You're getting in from 95, let's just say you get in up to here, you make around 10% if you sell at the top. Are you the type of person that would do that? That is the main question, right? And then you're getting into a messy area. You're getting into a messy zone here. If you're the type of person that's willing to hold this, no problem. You get in whenever you want. If you have the discipline, get in whenever you want. If you don't have the discipline, you have to be careful. The same thing here. What happened is we broke down below the 13, the 20, and the 50, and we said we're going to use the 100-day moving average, 100 period moving average as support. We had a double bounce off of that. We continue to move higher, and we don't come back and touch it all the way into this level, up to $1. Using this strategy is a totally different ball game. So you get in at 83, and you don't end up selling it until you get 1, 2, 3 candlesticks. So on the second candlestick below the line should be your exit. This is very rare. It doesn't happen a lot where you have 3 candlesticks and it continues higher. We did have it, good for us, but this is the situation that we're in. Right, let me look up some stocks that didn't do too well. Give me 1 second here. Again, I don't like making these videos prepared, because then it looks like, oh, you had time to prepare for this. I want to go in exactly if you were to look at it, if we were to look at it right now together. I want to do it like that. And let's take a look at maybe FNJN. That's a good example, because I think that is a really, look at this right now. This is beautiful. It's a prime example of what can happen. All right. So the stock starts to curl down. You have an opportunity to get out here at 187. It does go back up to 208. Are you the type of person that would sell at 208? If you are that type of person, or even if you would sell at 206 or even 204, if you are that type of person, then these rules do not apply to you. But you're looking at a profit of about 5% from the time it started to curl down to the price at the very top, and it doesn't go above that price all day long. Speaking of, it's a pretty nice setup. I actually like this setup. I think the stock will probably do well if it can gap up one more time tomorrow. I don't see it continuing to run, but we'll keep an eye on it. Right, so this is the thing. You don't want to waste your whole day on one stock. You don't want to waste your whole day on one stock. You want to get in, get out, make your profits, and move on. Sometimes you don't have trades. I understand. No problem. It happens. So in those situations, you probably had to find a brokerage that allows you to trade, like SureTrader, which allows you to trade. Now the problem is their fees are out of this world, right? But if you are the type of person that's disciplined enough and you're not going to get in at the wrong time and you're going to take quick profits, then it doesn't really matter what happens next. Because as long as you're winning on the trades, as long as you're winning on 2 out of 3 trades, you're doing well. 2 out of 3, that's not hard. 7 out of 10, that is not hard. So you could have 3 losers to begin your streak, and you could end up running 7 winners in a row, and you're doing well. Even if you have 4 losers and you get 6 winners, you're still doing okay. 6 out of 10 is not bad, as long as you're being disciplined and you're not losing more on your losses than you are winning on your winners. Your winners have to be bigger than your losses, and that's what matters most. Alright, so I hope this video helps. Observe this tomorrow and see what happens. And if the 1 minute is too fast for you, you can always use the 2 minute. The 2 minute gives you a bit of a better idea You can even go to the 5 minute. It gives you a bit more of a better idea. And let's take a look here. Let's see. This one starts to curl down here. Oh, as soon as the market opens. No, actually that's 10:05, and then it curls back up. It does go back up, but this is not the type of stock you want to trade. This is for people that have been trading for years and years. This is for them. And not every time are you going to get this sort of a bounce. The only reason this thing moved higher up is because it had gapped up. If it didn't gap up, you wouldn't get that move. Now, let me take a look at one more, because we looked at two really good examples, and we're looking at, let's see if we can find one example that wasn't so good. HZNP. This stock didn't gap up. And, well, we're not even going to get the curl here. But, let's see here. So this one starts to curl down here. And basically we're right about here, 15.32. And it moves down about, 29 cents. No, 19 cents, sorry. Moves down about 19 cents. I don't know what you would be thinking in this area, but I would be like, man, oh man, I got in at the wrong time. And at the same time, if you want to get ahead of the game, start looking at stocks that are starting to curl up in this area. But it doesn't mean you jump in right away blind. You just start watching the stock in this area. You see what it does next, and you go from there. It starts to curl up here. It starts to curl up here. And this is something we'll go over again. You know what? I think I can probably do it right now. This curl up, the closer it is to the zero line, the better the move is gonna be. If this curl up happens above the zero line, you will get a pretty decent move. So we got the curl up here, and basically you go from here to there. But it's not the best. But these are the things that I look for. Again, this is day trading. Oh, this is the 5 minute too. Looking at the wrong chart. Look at this one. Beautiful. Perfect example. On the 1 minute, curls down, and then boom, a huge flush coming down. Starts to curl up, starts to give you an indication. Again, a curl up closer to the zero line, and you can see the result that you get after. Closer to the zero line, if it can be above the zero line, it's still okay. But there are things that need to be worked upon, and we'll get to that level eventually. Again, this is not the only way that I trade. There are other things that I look for, and I don't say trade this way or trade that way. I'm just saying watch out for these things. Do not make this your strategy. Do not say I got in because there was a curl. Please do not say that. Do not say, hey man, I listened to your advice and the stock turned on me. Please do not do that. This is just to say watch out for these things and be careful, and don't get involved in these messy situations. Wait for the better setups and you'll see better results. And that's pretty much it. So I hope this helps. It'll give you a better indication. The least this thing can do, the minimum it should do, is not get you in at the wrong times if you follow this. The minimum. So let me know how it goes. It should be good, and I will be looking forward to hearing from you guys, or at least reading your messages to tell me what you think. Please share this video. I'm not looking for any sort of publicity. If you can save somebody, from blowing through an account, $50,000 gone in one trade, look at what you have accomplished. You have saved somebody from a potential divorce. You have saved somebody from maybe even committing suicide. Who knows? I don't know. Maybe I'm just making things up. But it gets really ugly when things don't work for you. You're depressed. You take out your frustration on your family members, on your kids, on your wife, on your parents, on your brothers, your sisters, your friends. It's not their fault you're not doing well in the markets. It's just how things work. You can help that person by sharing this video. So let me know what you think. I hope this helps, and Take care, and thanks for watching.